markets were not happy today with the potential for a double peak inflation, double top inflation. And again, I'm still traveling, coming to you from my hotel room on the road. So let's jump in and take a look at the charts and see what's going on here. And all right, here we go. So the Dow futures are down just a little bit. The Dow finished down about 400 today. S&P down about 1%. NASDAQ down 1.5%. I believe I was on the road, so I wasn't watching it closely. But we'll take a look at the charts here in a second. But, the big theme for today is the economic data that's coming out with inflation, with the inflation reports and things like that. And, the Fed talking 50 basis points now at their next meeting. So we're going to jump in here and we're going to, so we're looking at the screen now. So so the Fed talking about 50 basis points possibly at the next meeting. So the markets are going to start pricing that in and potentially retest these October lows, depending on, how bad the information continues to get before the next meeting. But right now, still kind of ranging. This is a Dow right here, not reversed, but just kind of ranging. You've got your lows here that if they hold, then it can continue to just kind of carve out a bottom in this range. Same thing with the NASDAQ, starting to range here after putting in this, potentially could be a bull flag here. Markets are trying to move. And why? Because liquidity. There's a lot of capital out there that needs to allocate, a lot of liquidity in the market. So that's what this is all about. It's all about liquidity in the markets that needs to go to work. The VIX catching a little bit of a bounce today, but still kind of ranging. Whenever the VIX is low, look out below. That 17, 18 range has been where the VIX has generally put in its reversals over the last few months. And, kind of consolidated over here back in, November of last year for a little bit, similar to this here, before ultimately spiking. But volatility definitely on the rise. We have some options expiry next week that's going to come into play. The dollar catching a little bounce here, again, working its way back up to this 105 range. And the 10-year catching a bounce up to that 3.86 range, kind of the last peak on the 10-year right there. If it breaks this range here, it could go back in and challenge the prior tops on the 10-year treasury. The 2-year yields and the 1-year are spiking on recession and inflation concerns. So a little bit of a risk-off environment right now. Let's take a look at Bitcoin. Bitcoin put in a nice bounce here the other day off of this range. Not quite getting down to the 20,000 range, caught the bounce at the 21.4 and has rejected right here at 25.2, which is basically where it rejected last time at 25.1, not quite in the 25.2, well, right in the 25.2 range. But here's the most important thing about Bitcoin that we've been talking about is that it rejected right on that 200-week moving average. That's a big line in the sand for Bitcoin that it really needs to get above to see any kind of a bottom to being set in or any kind of continuation. And last time it wrestled with the 200 and lost it, rejected twice. It dropped, to that, last level of the 15,000 range, which was a 30% drop. So if Bitcoin were to drop 30% from here, let's take a look at what that would look like. From the scene of the rejection, 30%, it's back down to your lows again. So retesting those $15,000, $16,000 lows. So not a big deal. So Bitcoin could be carving the bottom longer term in right here if it can continue to hold up. And if inflation and recession concerns don't get too out of hand, and the Fed doesn't get too out of hand, if they hike 50 basis points, the markets, will continue to work towards those lows it put in October and towards the low here. But it could potentially start carving that bottom longer term, reversing back, kind of like it did back in this area here, where we had some nice bounces and then ultimately put another bottom back in 2019 and then was able to continue on from there. But right now, there's still a lot of concern with inflation not being under control. And when we've been talking about the jobs market, labor market, consumer prices, all the prices and costs that really make a difference for the consumer is what's really a problem right now. And that's, for whatever reason, is what the Fed doesn't seem to be looking at or talking about, or maybe they know about it and they're just not saying anything. So anyways, coming to you live from the road, that is the market update. I'll see you on the next video.